Alright guys, welcome to the video. Anthony here, Special Analysis. Hope you're having a wonderful day. Want to talk about how it was played out this morning. Got it done pretty early, 8:30. Probably not going to trade for the rest of the day. Don't see any really reason to. Got a bunch of news coming out. We're just getting through the opening bell right now. It's 9:34 as you can see on my screen. Just getting that opening range formed out. We have economic numbers at 9:45, also more at 10 a.m., and then crude oil inventory reports at 10:30. So want to kind of talk about what we identified this morning. Had some pushes to the downside on the Nasdaq and the S&P, rotated off of a Nasdaq pivot. For gold, we've been fighting the earlier session prior highs with really no success getting above them. We popped above and fell back fairly quickly. But crude oil here put in a high at the 78.02 resistance level, and then put in a predictable lower high at 8:30. So that first high was placed right around 8 o'clock, 8:05, and that predictable lower high was placed at 8:30. So just a short while kind of afterwards. And then you can see we've drawn somewhat lower here. And I told my clients very specifically here on the 8:30 candle, right, as we were printing this, hey, if we cannot get back above 77.95 very specifically, that there's a good chance crude here starts to fall back, potentially towards a prior high and even the VWAPs, which is precisely what happened. There was evidence to suggest at 8:30 that a lower high was placed, and then coming through the 8:20 low really just kind of confirmed that. And you can see we're still drifting a little bit lower at the moment. If you look at the top chart here, you can see the session VWAP here and this 7760 support level. So we're still kind of dancing on this. Whether we break below this or not, that story's still yet to be written. Especially on Wednesdays when there is an inventory report, I prefer to try to get my trade out of the way beforehand. I don't like holding into an inventory report, and if I'm starting to near that 10:30 time frame, I'm not really interested in trying to fight it, to be perfectly honest with you. So this worked out well. Highly predictable high here, very predictable lower high here, and then we took the drawdown. Now, my target was down here, 77.60. I did get stopped out on the way there. I started not to like the way certain candles looked, so I took partial profit at this prior high, 77.77. So I did lock in. I'm sorry, I took profit at 77.70. My apologies. So I locked in 17 ticks on half of my position, and then I got stopped out as I continued to advance my stop. I was just concerned that the market was going to aggressively push against me. The 9 a.m. crude open got a little volatile there, super strong selling, minimal follow through right away, so I was a little bit concerned. Yes, we ultimately filled the full target. Did I get the full target? No. But I took profit partially, and then I got stopped out with the balance also in the profit. Not disappointed in the way my trade played out by any means. Could it have played out better? Yep. Could I have held it all in hindsight? Yep. Would it have worked? Also yes. But listen, I'm a very conservative trader, right? I want low risk, high probability, and the most important thing that I can do is take profits when the market offers it to me, and also advance my stop when the market offers that opportunity as well. That's what I did. I'm not disappointed in the outcome. I will include a video of the trade transpiring inside the blog post. So if you link to the blog post from this video, depending on where you're seeing it, it will have a video of how I managed the trade from this lower high until I got stopped out as we approach 77.60. I'll also include an image of the footprint chart, which led me to believe that at this 8:30 here, lower high, there was a good chance we were going to continue lower, so that you can see exactly what my thought process was, exactly the evidence that I felt was meaningful to seeing the market push lower. All right. We have lots of economic numbers here. As I'm looking at the Nasdaq, the S&P, we have still fallen under pressure here through the opening bell. And we'll see what the balance of the day kind of follows through with. But for the moment, that's the way I played the market. This is the way I talked to my clients through, how I took this play. Very simply, hey guys, at this 8:30 candle, if we cannot close above 77.95, I feel there's a high probability chance, based on the evidence, that the market could push lower, and it did exactly that. So that's how it was played out early. If the balance of the day produces another opportunity, I will update this with another video added to the blog post. But just want to share with you guys what I did this morning, how I did it, why I did it, and all those details will be broken down for you. All right. Appreciate you being here. If I can do anything for you, always feel free to reach out. If you have any questions, you can leave comments below, or I will leave my email address as well. All right, guys, God bless, and I will see you in the next video. I hope you have a wonderful day.